Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Tuesday, December 27th. Friendly reminder, the markets are closed on Monday, the 26th, in celebration of Christmas. This will be a technical analysis breakdown, so if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. Real quick, a couple of clarification points. Number one, the price you see right there will be moving around and changing, and the candlestick you see right there will also be moving around and changing. That is because the market is still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks represents 30 minutes worth of time. So stock number one here, APE, big move yesterday, and that continued today with the gap up. So certainly updates need to be made. I'm going to go ahead and adjust this area of resistance up to here and then make the conversion. This conversion is just a basic rule in technical analysis, which states when levels of resistance are broken and closed above, they tend to act as support. So one of the newest areas of support going to be right up there at the $1.40 mark. I'll just go ahead and get rid of that level as it served its purpose for now. So if there are any sort of bigger pullbacks, then that's the level that you'd ideally like to see hold strong. But I mean, think about it now. Even if the price were to come down there, not saying it will, and if it were to level out, what would you still have from the big picture point of view? Well, you'd still have a set of lows there, lows down here. And if you envision each of these as stair steps, overall, the stair steps are very clearly still progressing in the upwards direction, which just goes to show that this thing could pull back quite a bit more and the overall chart would still be perfectly fine. As far as levels of resistance are concerned, key level to watch moving forward is going to be that resistance trend line right there. So you got to think that probably quite a few people are watching that trend line. So there is the potential of those self-fulfilling prophecy dynamics where because so many people are watching the same thing and wondering the same thing, like I said, call it a self-fulfilling prophecy, call it whatever you want. It can in and of itself produce good, solid, worthwhile movement. So no guarantees, but is it valid to think that if the price comes up there and gets the break up through there, that could create additional buying pressure? That's certainly a plausible outcome. Next one, XPON. Pretty crazy day when you stop and think about it. And, true story to think that some people were buying up there this morning. They're not going to have a very good Christmas because, or at least hopefully they had a stop loss, because if they didn't, you can see here, very, very deep pullback. So this is a little tricky to talk about because it does depend on perspective, meaning if you're a day trader and you bought right there and your plan was to buy and sell within 7 minutes, well then yeah, from that angle, the chart looks really bad. But if you do care about the bigger picture of things, even with the pullback here, the price does still have plenty of opportunities to build that higher base, which is I just talked about on the previous one. Going to be right here at $2 as a key level of support and 13 cents, meaning if the price continues to hover around where it is, from the bigger picture, what do you still have? Well, you have lows here, you have that low down there, and overall you still do technically have stair steps progressing in the upwards direction. So that's why I keep going back and saying, well, it depends on their perspective, because I get it. If you are a day trader and you bought right there, then yeah, you really don't care about these stair steps, but that's why I'm trying to make the distinction here. In terms of levels of resistance moving forward, if this thing is going to try to regain momentum, I think a lot of people are probably going to be watching right up there around $2.75. So keep an eye on that as that initial area of resistance. But overall, seemingly the pullback is over given the sideways nature of the price movement. So we'll see how this one plays out next week. Next one, ORIC, and this will mean a bit more to those of you that watched yesterday's video, but if you did, hopefully remember me talking about that red line and this pattern, because you can see here this morning price came, broke through the pattern, and then just a beautiful technical breakout. So for any of those of you that watched yesterday's video and took advantage of that pattern, congratulations, well done. On that pattern breakup. But let's get some new levels updated here. So the newest levels to watch moving forward is going to be the new key level of support, which sits right here at approximately $5.25. That's just the former breakout point. So breakout points tend to act as support if it does pull back and back test it. So you want to keep a close eye on that. And then as far as new levels of resistance, a give or take right up here around that $6 mark is very clearly where the price has struggled to either build momentum or keep its momentum. I do realize that one time it did break above there, but that's why I say keep the momentum, because it had it for a small amount of time before the price just dropped down below it. So keep an eye on that $6 mark. But all in all, the trend continues, so which has been the theme right now. Even if the price were to pull back to that level, you'd still have the lows there, lows there, lows there, lows there. You get the idea with the overall stair steps. But overall, ORIC, very, very impressive day. Next one, AMC, and not a good day at all. In fact, the price is essentially drifting right back to where it was, which is what I talked about in yesterday's video, where I acknowledge, yeah, from here to here, very, very impressive move, no doubt about that. But is there any sort of genuine power behind it? or is this just going to go right back to where it was? And I was defining quote unquote back to where it was as down below 440, that green line there. And you can see that as I speak, the price is a little bit below that area. Now, to look at the glass as half full, at least the price didn't come down here and then just blast down through it. So it's still within the general area of that level. But the main thing in my mind going into next week is any sort of further separation away from 440. That just confirms the fact that the price is literally going right back to where it started, meaning the price has made a great move and then all of a sudden gone right back to where it was. Not exactly a sign of genuine power. So in my mind, that is going to be the most interesting dynamic and most important dynamic. What happens with 440? Is the price going to get back up above it, or is the price just going to continue to drift further and further away from it, which just illustrates that this move here was actually a dead cat bounce. Next one here, TSLA Tesla, and talked about this one yesterday and how it was a bear pennant. And for those of you that took this trade this morning, I played it, did well with it, but price came down here, broke to the bottom part of that pattern, and then a very, big move to the downside. Although a little tricky because it's not like it got continuation as the price then snapped back upwards before coming back down and starting to get choppy again. So overall, the bear pennant worked out as you would expect, moved to the downside, and now it's just a question of, how is it going to play out next week, with the next level being, and this, again, you got to think a lot of people are watching this level, so there's, those self-fulfilling prophecy attributes that come with it. But right here at 121.50, you can see once, twice, 3 times the price got down around that area, and to give full credit where credit's due, the bulls held strong. Now, let me be very clear, and I wish I could say trading was this easy. Just because the price has bounced 3 times before does not mean if the price comes down here, it's for sure going to bounce again. But is it plausible? Is it valid for you to think, hey, I think it could bounce from that area? Yeah, you're absolutely plausible. Nobody could accuse you of being a degenerate gambler that is just randomly entering into trades. No, you would have good logic behind that trade. Again, does not mean that it will work out, but it is actually a thoughtful trade plan to have. And if you can honor those stop losses, then from a risk reward standpoint, that could work out very nicely. As far as those areas of resistance, definitely seems to continue to be a key level right up there around that mark, around, let's call it 126.50. But yeah, overall, Tesla remains pretty shaky. Real quick, I wanted to take a break and personally invite you to get signed up for this free live online training that I'm offering next week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency as a trader, then I want you to get signed up for the free live training. If you're watching on YouTube, there's a link down in the description box you can click on, or if you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you've seen, then I want you to get signed up for the free training. CORZ will be our next one here, and this is an interesting one because it's a penny stock, which are popular, and it's remaining popular, and you can see that via the bigger volume here. And the price has now started to go sideways, which, as I've said, does not mean that it's a guaranteed bottom, but you know what? I can see the thought process of thinking, okay, maybe, just maybe, this is some sort of bottom. So with that being said, a couple of key levels. The first level, nothing new, assuming you watch past videos, that's down here at 8 cents. The price has bounced off here 3 times before, so if the price were to come back down there, it's plausible for you to think that it could once again bounce off from that area. But if the price just decides to continue back upwards, as far as the main areas of resistance, you have that initial level right there, purple line, 50 period moving average at 14, and then the 200 period moving average right there at 17 cents. Next one, NIO, which so far so good, has been doing a good job in regards to this green line that I've drawn before in past videos. So right here at $10.80. Now, it's not an exact level, but you can see, generally speaking, whenever the price has been down around this area, it has held as support, and just one of those levels where the bears just failed to gain any sort of momentum. Yeah, maybe they can break through it, but then the momentum disappears, back up it goes. Yeah, they can break through it, back up it goes. So the idea here, and what's very clear, is that there are seemingly at this point in time a lot of buyers down around 1080. So you're going to want to keep an eye on that level moving forward if the price does come back down there. But you're also going to have shorts, and rightfully so, watching this level thinking, yeah, but I think if the price comes down here and breaks down through it, that break in of itself could create downwards pressure. So I understand that too. That's a valid thought process to have. If there is any sort of bounce in the upwards direction, key level resistance is going to be all about that purple line there, 50 period moving average at, let's just call it 11.15, but you can see right there, rejected the price, right there, rejected the price. So in my mind, 11.15 key area of resistance, 10.80 key level of support. Next one, TAL, which is a tricky chart to talk about because it goes back to the idea of, well, what was your perspective going in? Meaning if you're a day trader and you bought right there, or you bought right there and your plan was to buy and sell within 7 minutes, well, then from that angle, the chart looks really, really bad. But if you do care about the big picture of things, then let's look at it from that angle. So yes, sure, nobody can refute the fact that past couple of days, there has been this downwards channel. But because we are assuming you care about the bigger picture of things, you have to ask the question, well, what was going on before the past couple of days? And you can see right here, a very, very big upwards move. So in other words, from a big picture point of view, we now have a bull flag pattern. So if you like to play bull flags in stocks that are generally uptrending, you like to play this, down around the $10 mark, this is definitely one that I'd keep an eye on, because yeah, you have a very strong uptrend, and yeah, right now there is a pullback within the uptrend, but if you believe that this pullback is just temporary before the trend resumes itself, then definitely keeping an eye on. Next one, IMRN, which is a very, very ugly looking chart, including the last 30 minutes. I'm not sure it could have gotten any more ugly than that. But as you longer time viewers have heard me say, there can be opportunity in the ugly. So that's what let's try to find here. And these are situations where if you're not going to be a disciplined trader, I mean, you shouldn't be trading in the first place, but that's a whole nother topic. You definitely should not be trading these sorts of situations. But if you do like to play stocks that, potentially have the gap closed and are looking really ugly, then that's what makes $1.60 very, very interesting. Again, no guarantees, but from a risk versus reward standpoint, even if the price comes down here and only bounces, quote unquote, only back up to right there, compared to what's being risked, you could have a very favorable equation there, which is what our job is as traders. We want to make sure that the risk makes sense relative to the reward. So like I said, if you like to play these situations where things are indeed looking ugly, but there still could potentially be some good opportunity within that ugly, I definitely keep an eye on this one, particularly if you like these stocks down below the $5 mark. Next one, TQQQ, which is an ETF that follows the NASDAQ. So if you believe that the NASDAQ market as a whole is going to rise, then this one will also rise, but it just allows you access at a much lower price point, which is what makes this the most popular ETF out there. And this will mean a bit more to those of you that watch past videos, but if you have, hopefully remember me talking about that red line there at 1750, which now you can see the price is back at, and in fact has closed slightly above. But there's a big but here, and the big old question mark heading into next week is, yeah, I get it. The price has technically broken above that area of resistance. However, what's happened throughout the course of the day before? Well, broke above it there, failed. Broke above it there and there, failed. Broke above it there, failed. Now, does that mean that for sure guaranteed this break is going to fail? No, again, there are no guarantees. My point here is, yeah, that's a good step, but I'd be skeptically optimistic because as you saw, this 1750 mark has a pretty big track record right now of just kind of saying, oh, you're getting some momentum, no more, and back down it goes. So that'll be the big question mark heading to next week is indeed this the start of a bigger breakout? It very well may not be, and the price rolls back over, but that is the two-sided coin because, well, maybe it is the start of something much bigger, and this thing absolutely explodes. So for that reason and that reason alone, definitely an interesting situation, and that's what a watch list is all about. Finding those interesting situations, not randomly rushing out and buying anything, but watching and seeing how the price behaves. So let's see if this is indeed the start of a bigger breakout. So that wraps up the top 10. Again, if you like what you saw here, then I want you to get signed up for the free live training. It'll be next week, Thursday, December 29th at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please do two things for me. Hit that like button, leave a simple comment. Those two things communicate to me that you enjoy. And as long as I know people are enjoying, I'll continue to put in the required time and effort to get these watch lists out to you. So again, get signed up for that free training. Hit the like button, leave a simple comment below. Everybody take care and have a very Merry Christmas.